YouTube, hey there, Casey Dimon, TaxSellAcademy.com. Thank you so much for joining me as I record this episode for the Tax Sell Podcast. As always, if you enjoy podcasts, make sure you check us out at TaxSellPodcast.com. But if you prefer this video version right here on YouTube, do me a favor, hit that subscribe button and click that thumbs up button as well. That way you don't miss out on future training videos. Let's go ahead and switch on over and we'll record the audio portion right now. Welcome to the Tax Sell Podcast, where tax sell investing is made easy. My name is Casey Dimon. I'm a tax sell veteran, the author of the Tax Sell Playbook, founder of the Tax Sell Academy, the leading tax sell expert and trainer, and I am the host right here on the Tax Sell Podcast. Thank you so much for joining me on today's podcast. This podcast is provided completely free to help teach you about investing in tax-defaulted real estate and is made possible through the Tax Sell Academy. If you're looking to learn about tax-defaulted real estate in a comprehensive, step-by-step basis, head on over to TaxSellAcademy.com. Again, that's TaxSellAcademy.com, and just click on Join if you want to become a member of the Academy. All right, guys, today I want to discuss two things that will really help you determine your approach. Time and money, right? It's so important in our world. But over the last week, I've had two coaching calls from really opposite ends of the spectrum. And they've really kind of helped me to illustrate this for not only myself, but for you guys as well. So last week, I spoke to a gentleman who was looking to start investing with just $1,000. And I've actually have a lot of people that start with much less than that. But last week's coaching calls, he wanted $1,000 initial investment to get started, right? And yesterday, I spoke to a gentleman that had $4 million to invest. So again, completely opposite ends of the spectrum. Both had very limited tax sell experience. And the truth was, I recommended completely different avenues for both of these investors. I've also had situations before where somebody might have 30, 40, 50 hours a week to invest full time, and others only have an hour or maybe 2 hours a week. Again, completely different approaches are required. And the fact is that these two, time and money, are so tightly intertwined in this business, most people really don't even realize it. Regardless of the amount of time or the amount of money that you have, there is opportunity for you through tax sell investing. Now, how you use your money will dictate how you spend your time and how you should be investing to make the most use of your money and time both. And this will make sense shortly as we discuss it a little bit deeper. So, when you're starting with minimal capital, when you only have $100 or $1,000 or $500, whatever it might be, your strategy should revolve around multiplying that capital as quickly as possible. Again, I said multiplying it, okay? We're not talking about just getting a 5, 6, 7% return. You want to multiply that capital. Now, in some areas, it's not even possible to invest in tax liens or tax deeds for, say, $100, which means you're going to have to spend time to find other areas. And when you do find other areas where it is possible, then you need to determine the specific properties that are the best deals and will help you multiply that capital. You need to look for areas and properties where you can multiply it 2, 3 times, maybe even more. You want those incredible deals that provide insane results. But here's the deal. Those things, they're pretty difficult to find. You're likely going to have to scour through dozens or hundreds of properties in order to find just one. Perhaps you even need to attend numerous auctions before you're able to buy your first property, the right property for you. Maybe you even have to place dozens or hundreds of bids before finally one sticks. Now, I've told this story before in the Tax Sell Playbook about the very first auction that I won a piece of property at. I go into detail in the book, but the short story is that I can vividly remember sitting there, placing bid after bid after bid, and not winning a single property. I was the guy in the room that every single person there knew would get outbid immediately, time and time again. Then, towards the end of that auction, one of the regulars said, just let the kid have it, because I was only 18 at the time. But that changed my life forever when I finally won my first property. The point is, I went to a lot of auctions. I placed lots and lots of bids before one finally stuck. The lack of money will require you to use your time working towards finding that one specific deal that really provides you with that boost that you're looking for. It'll require substantial effort, and it will require that you have the mental stamina to want to keep going. Understanding and accepting this ahead of time is the only way that you'll succeed in this business when you start with minimal capital. Now, on the opposite end let's say that you have a few $1,000,000 to invest. The investor that has a few $1,000,000 should take an entirely different approach than the guy that's only starting with a few $100. So if your funds are limited, you're going to be spending lots and lots of time looking for that one good deal, because odds are your business, your investment, your capital is going to be reliant on that one good deal to really hit it big. But as a well-funded investor, if you spend all your time chasing one deal, you're going to get burnt out. And your returns compared to the investable capital that you have available are going to be minimal. You'll also want to invest in larger chunks, that is, more expensive properties. It takes quite a bit more effort to track $10,100 investments when you compare it to perhaps $110,000 investments. You usually want larger investments that you want to invest in if you're very well funded. So instead of chasing one property, the well-funded investor needs to develop a system that they can follow, which will allow them to track all their investments on average over time. You should approach it not on a property by property basis, but instead on a portfolio-wide basis. You should know that there's going to be a few deals that just won't make exactly what you think they should have made, right? But over time, over the lifetime of that portfolio, or on a year-to-year basis, your yield will be what you're expecting, of course, if you do it correctly. Now, this isn't to say that you don't have to invest any time. Of course you do. You will obviously have to perform due diligence on all the liens and the properties that you're investing in. But you'll also have to invest a large portion of your time into the required systems to operate your business. It requires a solid system in order to successfully invest and monitor where and how millions of dollars are being invested, especially when you're using tax liens and tax deeds. And even in some areas where you're buying just the higher price stuff, that still might cap out at only $5,000 or $10,000. So you must have those systems in place. So as you can see, depending on the amount of capital that you have to invest, you can then determine how you'll spend your time and how and where you should invest that capital. It all really just intertwines. Now, even you new investors who might only have $100 or $500 or $1,000 to start off with, I always want you to remember that one day you too are going to need these same systems. So from day number one, when you're just starting out, ask yourself, how can I develop this? How can I get more efficient in what I do? Not only will it help you in the short term, but it will also allow you to grow and scale your business into those systems. You'll always, of course, be learning, hopefully, and as you develop, your systems will also develop. So understand, day number one, $100, you still need systems that you can help to operate your business off of. Now, before I close out today's episode, on that same note, I want you to also take into account your specific personality and skill sets, okay? So a CPA that's used to looking at numbers all day long, that has $1 million to invest, might be perfectly happy just staring at a computer screen, tracking ROIs, graphing stuff, and just sitting at their computer all day long. But a home builder that's used to being in the field all day, they probably don't want to do that. Instead, they might be better buying and fixing up dilapidated homes because it suits their personality and skill sets better. So be sure to take all this into account as you begin or continue your tax sale investment journey. This is an incredible business, and the fact is that there are hundreds of different ways that you can make money in this business. Most of those approaches will be determined by your available capital, which determines the desired use of your time and your investment strategies. Then, of course, don't forget to add in a little bit of personal preference and skill set so you make sure that you don't get burnt out. I really hope you found this episode helpful and that you are enjoying our podcast. If you are, please consider taking just a few seconds out of your day to leave us a 5-star rating and perhaps even some positive feedback on whatever platform you're listening to us on. It really gives us that motivation and desire to continue to expand our business on both the free and the premium side. And we truly hope that we're able to help play a small part in your tax sale success. For more information on tax sale investing, head on over to taxsaleacademy.com. There's a link down below in the show notes, but again, it's taxsaleacademy.com. Click on join and consider becoming a member of the Tax Sale Academy. Thank you so much for joining me. Take care, folks. Bye-bye.